Meta missed earnings this week. EPS came in at $6.39 against an estimate of $7.10. Revenue beat at $47.5 billion, but the market focused on the miss, the raised AI spending guidance, and Q3 guidance that came in below expectations. We ran the 5-day FSR. The score is almost 98%, the highest earnings week reading we have ever recorded on this channel. Meta operates Facebook, Instagram, WhatsApp, and Threads. Daily active users hit 3.4 billion. Meta AI reached 1.4 billion monthly users. The business is massive, but Meta raised their AI capex guidance to between 72 billion and 80 billion for 2026, and the market is asking the same question it asked about Google and Tesla this week. Where's all that spending going, and when does it pay off? 5 days of 30-minute interval data, FSR score almost 98%, rolling FSR 99%. Look at this chart carefully. There is no cliff, no single moment of panic. Price declined steadily and consistently from 612 at the start of the week all the way to 587 by today's close. The 5-day average sits at 598. Price is now below it. Rolling FSR of 99% is the highest reading we've seen on any earnings reaction chart. The sell-off has been extraordinarily structured. 98% for FSR and earnings miss week is remarkable. It tells you this was not a panic, not a shock. The market moved in one direction with near perfect consistency all week. Every 30-minute window was patterned. That kind of reading suggests institutional repositioning, not retail panic selling. Organized, deliberate, structured selling over 5 days. Analyst average target 756.29, nearly 170 above today's price. The business has 3.43 billion daily active users and 47.5 billion in quarterly revenue. The EPS miss and AI spending concern are real, but the structural story remains intact. What the FSR is showing you is a week of organized repricing, not a breakdown. Full tool at predictability-api.com. Link is in the description. Thanks for stopping by. We'll catch you in the next one.